the headline, was that they'd lost 1 million subscribers. And in general, that would be bad. But they'd guided to lose 2 million. So I guess it's somewhat positive. I did say a week or so ago, 2 weeks ago, that Netflix are perennial sandbaggers when it comes to their earnings. And that we should expect that they would have done this. And it was nice to be right for the first time this year. So revenue was a slight miss. It was $7.97 billion. Expected was $8.04 billion. This would have been a large beat if the dollar wasn't so strong. If we were talking constant currency, they would have added an extra $350 million to that revenue. So it would have been 8.2. So 8.3, 8.35. EPS was an absolute slam dunk. $3.20 versus $2.94 expected, which again is impressive given the strong dollar. It would have been higher. There was $150 million of impairments due to some severance costs. They give a really, really attractive package when they let staff go, and there was an early ending of some office leases. They called it a right sizing of their footprint, which was quite interesting. Content spend, Paul, I know you like this one. $17.9 billion. That was flat year on year, which is good to see. Analysts have been wondering when content spend flattens out, and it turns out that it was 2022. Annual revenues per average sub is up to its all-time highs. It's nice to see that. It has been pretty much continuously growing ever since Netflix's inception, and it continues to do so. Guidance-wise, it looked a little bit soft. Analysts were hoping that Netflix would add 1.8 million new subs. They've only guided for one. They've guided for $7.87 billion of revenue. Analysts wanted 8.06. So this implies revenue growth of only about 5% or 12% if we were in constant currency year over year. EPS, $2.14. Analysts wanted $2.71. Remember, though, that Netflix are sandbaggers and the strength of the dollar may persist, it may not. 60% of Netflix's revenue comes from outside of the US, so obviously the rising dollar will weaken this somewhat. They're guiding for $1 billion in free cash flow in this financial year, and that was double what Wall Street expected. So onto content, it was a cracking report in terms of content.
No.
So
let's just break it up a little bit. Let's first got to pay you dues. Last week you called this, right? You called this sandbag massively. I was skeptical. I thought you had a great idea, but when it's come in 1 million less subscribers than they told everyone about, you knew that. And did you make any money off Netflix going into this, or did you not have the balls to back it up?
Netflix would be my biggest position if it wasn't down so much. I've got about 6k in at the moment, and it's still about 25% down. So I've been buying Netflix all the way down. I honestly, and I'll get onto this later, I don't think Netflix is in any trouble whatsoever, and I think anybody trying to tell you that it is pushing a false narrative, and I've sort of said that a few times on the Discord yesterday. There's a lot of people you can pull out segments of this report, and in isolation they sound awful. But the truth of the matter is that when you put people's bills up, you get churn. And Netflix is experiencing 1% churn after putting up people's bills by 10%. Now, you just do the maths on that pretty quickly. If you could do that forever, putting up people's bills 10% and taking 1% churn, you'd take that. You'd take that for a while. And that's what Netflix is prepared to do. But yeah, I called it. It was a guess. Look, I can't give myself any credit. It was just a guess. Every time I've ever looked at Netflix's earnings, there's only once that they've overpromised and underdelivered, and that was the quarter before. Every other quarter they've been complete sandbaggers because they like to underpromise and overdeliver, and I just thought, on the reverse, that's probably what we would experience here.
So a question then, Steve, about this. I'm trying to work out whether I view these subscriber numbers positively or negatively, because, okay, I'm not going to just base it off the numbers they gave before, because I take you at your word for thinking that they're going to report lower than they're likely to produce here. And that's happened, right? So in theory, that's a good thing, but I'm not quite sure what I was expecting anyway, which makes me not sure whether I was supposed to be surprised positively or negatively by this, basically. The other thing I noticed is I had a little look at where these subscribers are coming and going from. They lost about 2 million out of the US, Canada, and Europe, and got back 1 million from Asia Pacific. Latin America's about flat. Subscribers pay more in those first two places than they do in that second one, on average. I think the average for... I've written this down wrong slightly, but the average for US Canada is about $15. The average for Asia Pacific's about 8 and a bit. I sort of have this nagging worry that they're replacing higher value subs with lower value subs.
Potentially, but you've got to remember ad supported comes into those areas is going to boost that ARPU up.
Yeah, more on that in a moment,
when
sure.
that comes in. Yeah, so yeah, I get that point. I mean, one of the places you will look at ARPU discrepancies is just looking at Pinterest's report. We've noted quite a lot of times that in America they get far more revenue than even in Europe, and never mind countries beyond that. So Netflix has the same problem, but you're talking about markets that they're just teetering into versus markets that they've been in for a really long time. So yeah, temporarily they might be replacing good with average, but average has a way of becoming good in these markets.
Yeah, it goes to show a lot for the others. I do still think the other companies have a lot more to grow into this, but I think I agree with you. Netflix doesn't really have a problem, and I think the rest of the companies that are entering this space, or at least trying to compete in this space now, do have to rely on the productivity of Netflix, and I totally get that.
Yeah, okay. So I'll shuffle on then. So content-wise, it was a cracking review. I think we all know about how well Stranger Things has done. It's done a few billion hours of watch content, but there was other stuff in there as well. So they said that season 3 of Umbrella Academy has done 284 million hours at the moment, and that's pretty much new out. The Lincoln Lawyer legal drama has done 277 million hours. Heartstopper, 67 million hours. Selling Sunset, 95 million. Ultimatum, 148 million hours. Even going through to things like Rhythm and Flow in France, which was a rap competition show that they did. It was a massive success, and the winner of the first season has gone on to have a number 1 across all streaming platforms in France. So they're calling it the Netflix effect. They even made good progress in film. I think if you watch the basketball drama, Adam Sandler's Hustle, it reviewed pretty well, and it's done 186 million hours as well. So it's nice to see Netflix make a good film, because they don't make an awful lot of them. So they announced that in the earnings report that Nielsen's going to release some new numbers on Thursday, that show Netflix has reached an all-time high in the United States. Its market share is now at 7.7%. It's the largest both streaming and non-streaming platform in the US. So it's beating cable TV now, which is pretty cool. Do you guys want to come? Do you want to chime in on that? Have you got anything for that?
Yeah, if I may, on Stranger Things, one of the things I was reading is that this is partly responsible for helping their churn, not just because it's a very good show that I have not seen, but because they apparently usually release things in terms of a massive block and let you binge watch them and then run away. This time they kind of dropped it out bit by bit, I think, which perhaps helped people hang on over the quarter or something like that, so they keep their Netflix subscription, or keep using whoever's Netflix subscription they're using, in my case, so they can see the next episode. I haven't actually watched Stranger Things, but that seemed to me like quite a clever move to try and hold back churn. I don't know how effective it actually was.
You have to continue to drip feed it in week by week. Every other service is doing that at the moment. I'm still a little bit. I know Netflix is number 1. I'm still a bit concerned by the competition. I was reading articles. I was reading a lot of Vox Pops today saying, Netflix doesn't have the same quality of content that everybody else has. I know that Emmys are obviously good proof that Netflix does have continuously good content. Me personally, I'm just talking from an anecdotal level. I'm doing everything I can to get rid of Netflix, but for some reason the kids just they really like some of the odd little Netflix shows that come out. There's one called Chip and Potato. It's like about this kid who's a pug who goes through loads of dramas in life, and it's actually quite emotive for kids, so it's quite a good one for your kids to still have. My kid's favourite though is Spidey and His Amazing Friends, which is on Disney Plus. So I have to keep them both at the moment, which is really annoying. So I've got to tease them away from something. And personally, from an anecdotal level, I would be trying to stay with Disney Plus, I think. But do you think Netflix needs to continue making some hitters, and do you think it's gonna do that?
I think, look, I've never thought this was an issue. I've never understood why we need a supremacy when it comes to streaming. People are used to paying 70 quid for cable, and none of these things are 70. You can have them all and still pay less. So there's no reason not to, to worry about competition in that regard. I think everything has its merits. Netflix in this case is going for more localization, which is interesting because HBO is, you have to want to consume US TV if you want HBO. It doesn't show you anything else other than US TV. Whereas Netflix is saying, like, look, we're in India. India will want to consume some US TV, but it won't want to consume that solely. So we have to localize our content. We have to localize and make things like Squid Game, which ended up being an international success. But and you'll get those little things, and that's the difference between the Netflix approach and its competition. That's how it's differentiating itself, and that's how it's building its moat, if you want, against these other companies. The fact is that HBO doesn't have the money to localize content into different regions. Unfortunately, it has some fantastic shows, but it's for people who want to watch US TV who aren't in the US.
Yeah, I was also reading about the value that Netflix has, as in its price point right now. Its price point is set at like $14.99, I think it is here in the UK. But it's definitely the most expensive out there of all the streaming services. That's not because it's expensive, though, and it's struggling to pay for anything. It appears that it's because all the others are ridiculously cheap and working at a loss. This means that maybe in 2 or 3 years, Netflix will still stay the same price, and the other companies will be starting to raise their price into Netflix's value, which makes Netflix much more valuable than the others from a pricing point right now. Do you have any more information on that, or is that kind of where it's at?
Well, the information's there to be seen in all the competition's financial reports. All you can see is either debt taken on to pay for content, or you can see cash flow severely reducing in, say, Disney's case. Yes, they're doing quite a big park refit as well at the moment, but they're spending a hell of a lot of money on content. And the problem with that at the moment is that the content that they're spending on primarily is Star Wars 1, Marvel 2, and everybody seems to be getting a little bit of Marvel fatigue at the moment. I don't know whether you've seen the reviews for Thor and the one they released before it, and even Spider-Man to a degree, all got sort of middling reviews for Marvel kind of thing, and that's a massive problem for Disney because that's been their cash cow, and at the moment it's looking a bit skinny.
I've had Marvel fatigue for about 10 years now. I'm fed up with the same video over and over again, basically. That's all it is. Oh, explosion, different superpower. We're done. Great. Get over to Amazon and watch The Boys. It's absolutely brilliant.
I forgot this is a time in the quarter where we all say what we're watching on Netflix. I should have written mine down before I came on. I've been watching a thing called Baking Impossible, which is sort of like Is It Cake? And it's sort of also like Nailed It. It's another terrible show that I can't really blame on my child because he doesn't watch it. But I've been watching that and it's awful, and I can't stop watching it, to be honest. So on the hits thing, I sort of feel like Netflix has this capacity to maybe keep doing them. On more serious kind of subject here, a couple of things in the report that jumped out at me is that I think they said they're now at something like 60% originals now, rather than stuff they've second licensed in, which indicates that they also think they're kind of past the halfway point in building out their library, and they're seeing this kind of ratio, which I wrote down and wasn't entirely sure I'd got the hang of, which is something like their cash invested in content over their amortization they get back from cash invested in content. Blah, blah numbers getting smaller, basically, which indicates that they are kind of getting more out of what they have rather than putting more in. At least I take it that's what that's supposed to be showing me. I'm very tentative around my understanding on that one, for what it's worth. But, I guess I'm kind of positive for them content-wise. I keep thinking they can't do it, and they seem to keep finding a way at the moment. So I guess I can see room for optimism there.
There was also, I don't know whether you guys saw this week, but if you get the Netflix app on your phone, you can also get access to Netflix Gaming now, providing you've got the subscription. And one of the studios they've bought has a game called Into the Breach, and it's getting really, really good reviews. I've played it before on the Switch. It's a bit of a strategy kind of game. It's fantastic. It's a really nice little addition to their service that you get completely free included with your Netflix subscription.
I'm going to go on that right after this.
But I
never knew about that.
Go for it. I'll quickly scrub on because I've still got a little bit to get through. But look, so there's a wider rollout of 2 of the new revenue streams were coming. An ad-supported tier. They've said will now be available in 2023. I know a lot of people were worried about this, but they have said that it's going to be a completely separate tier. The paid tiers will not be getting adverts. It won't be ad and paid. It'll just be, a new, cheaper tier that has, some kind of ad supporting that goes with it. This is key for countries where you can't charge a lot. For instance, in India, the average subscription price is a couple of dollars. If you can make up $3, $4, $5 on top of that with adverts, that'd be fantastic. They've announced that the deal they're doing to get the ads has been with Microsoft, which is a bit of a shock to everybody, a bit of a shock to Paul as well, because he thought Xander was still with AT&T.
I thought it was with HBO, but yeah, I didn't know.
Needham analyst Laura Martin, she said that she believes the only reason that Netflix have gone with Microsoft is that they are looking for an exit. Steve, you've highlighted this. Have you got a quick thought on it?
Yeah, I think it's false. I don't, for the life of me, see Netflix is doing this. I see them as the biggest player in this space at the moment, and they've done extremely well historically. I would be amazed if Netflix are looking for an exit here. That's Absolutely. Not what I wrote, but that's what I'm prepared to say.
Absolutely not. That's not what's happened. So they're thinking that Microsoft's going to do an Activision and buy it eventually. I just don't think that's going to happen. It's just absolutely insane, isn't it?
No, but that was the word she used. She said she called it doing an Activision.
It's more likely that we're heading into a high inflation environment where things are getting more expensive, and Netflix usually does things in-house. Maybe this bit of it, they've got something already pre-made with Microsoft. It's non-competitive. It just seems like a really good deal and probably a cheaper way for now, at least, to do this whole ad streaming thing. Maybe it'll be the reverse of that, and Netflix eventually just goes and buys Xandr because Xandr keeps getting passed around like a freaking hot potato.
Well, I was interested in this because famously Netflix use AWS. That's who their whole system is built off, and I wondered if maybe Microsoft was giving them a deal on Xandr to move over to Azure. That could be an interesting thing. But I did have a look at Xandr's tech, and they're actually using it at the moment in the Xbox store. It's really interesting. It's like low intrusion in entertainment advertising, so it's kind of the sort of thing you were hoping Netflix would adopt rather than something really obtuse like YouTube. 15 adverts before you get to watch what you want, kind of thing. But there goes our chances of being monetized.
We all own shares in YouTube. Why do you keep doing this?
I just had a thought. So obviously Netflix uses AWS, and now they're going to use Xandr. And the idea is there, with what you've been saying, is that Xandr and Azure will work together in some way better. It'll be faster, cleaner, that sort of thing. And those two having a lot more synergy because we're within the same company. So I can imagine there's going to be one day where the contract rolls over from AWS to Microsoft, and you've got this poor Netflix employee who's just got to go copy, paste all the way over to Azure, and then wait for like 4 million years while the data from Netflix library converts over to Azure. But, that's going to be a good job of sitting on it.
I don't even know how that would work. I would need somebody a hell of a lot smarter than me to even begin to help me understand how that would work. It is pretty crazy.
How would you move over that much data? You'd probably just go pick up the physical data center and put it over.
Take the hard drive.
Much. Wow. Yeah, I wouldn't know where to begin with that.
Right, so the second part of it anyway was that shared accounts are definitely coming. Netflix said that they were testing ways of handling this in Latin America at the moment. The reports from the area have hinted that you'll be able to add a new household to your plan, so I guess they're using some kind of quick IP scan to make sure that you are in the same house as each other. At the moment, it looks like it's going to be, when you adjust the currency back, about $2.99 per additional household, so I think that's pretty good. But I think that seems too cheap to me. I would expect it to come through with a little bit more. But adding ad-supported and shared accounts together, it's pretty easy to me to see where the next leg of Netflix's growth is going to come from. It's just about monetizing what it's already got. I think you're right
there. I think I'm kind of interested in the ad-supported tier, and I'm trying to work out how it sort of fits into this picture, because Netflix have been slow to go for what seems to be, to me, a fairly obvious thing to have, which is a lowish cost thing that drives you some ad revenue. I can see a few kind of questions I have about it, even though I instinctively think it's a great idea. So one is whether it's going to be any good. So all three of us, and especially I think Paul and me, have both said the Spotify ad-supported tier is painfully bad. I mean, it's really hard to stay on that tier. It's actually a great incentive to get you to pay the damn thing.
I've got another one now. I watch Taskmaster on Alt 4, and they play 3 5-minute adverts throughout the whole thing. So you're watching 15 minutes of adverts for probably a 40-minute show. It's painful. It's made me stop watching it, even though it's a great and funny show. I don't like it.
So I guess my wonder with Netflix is whether their ad-supported tier is going to be kind of discouragingly bad to try and push people onto the higher paid tiers. And I can't work out whether I think it should be or not, right? So there's a reason for thinking it should be, in the sense that you will bump people up into your kind of higher paid tier. There's a reason for thinking I guess it won't be, in that you need people in that tier to attract advertising dollars, presumably. Because what will really drive the advertising revenue is having a bunch of people on this advertising tier that people can reach. So you need to kind of make it in such a way that it's got enough people in it, I guess, to be worth it to advertisers. And it strikes me there's a balance there to be struck in a certain way. I don't know how big of a margin they have to aim into there for getting enough people, but still, and they definitely don't want to lose people downwards from what I can see of it. Or sorry, not definitely. They probably don't want to lose people downwards. They don't want their paid subscribers going, nah, sod it, I'll take the adverts, unless there's going to be massive ad revenue to compensate for that. Will there be? I don't know. So I'm just struggling to fit all these bits together in my head for the picture and what's kind of really going to push revenues along for Netflix here.
Yeah, I think... Sorry to get there. He's probably got something way more insightful to say, but I think this is a brand issue. I think by Netflix bringing on advertising into its lowest tier, that hurts Netflix brand. It's now no longer that luxury brand. I used to see it was a very, very luxury brand that you paid for. So I personally think, I don't know if Steve D has a different idea on this, he probably has, but I think this is a first class and coach kind of style thing that needs to happen. I think the upper tier of Netflix has to be so much better than the lower tier. So I don't think it can just be an advertising model and then not an advertising model. I think it needs to be a horrible, just getting by kind of advertising model, which will attract probably most of the customers. But then that top one needs to be really luxury. I think it needs to be really expensive as well. I think they can get away with that. And I think it has to be the difference between Emirates first class and Emirates economy, basically. That's how I see it. And I think that, to me, that's the only way this can go. This should go anyway.
So I go two ways on this. I think the best method that I would see would be to be accommodating with this tier in the same way that YouTube was when it essentially started, where you had like a banner ad or something like that, and then it slowly was one video ad, and then it was two and at the beginning, and then one in the middle and one at the beginning. And I think that's probably the way that they'll go, almost like frog boil people to accepting more advertisements. The flip side of that is a problem that Steve highlights, where people think, well, if it's just one advert, I can suffer that, before I watch Stranger Things. So it's a really delicate balance, isn't it? I trust Netflix to get it right. Is basically what I say. The reason I invest in them is because I think they've got a fantastic management team who have seen problems and managed them before, and I think this is just another thing for them. Shall I finish? I've got one last point. So they're snooking that they're acquiring Animal Logic, Paul. So more things for you to keep your Netflix subscription. These are the people behind the Lego movies, and they did Peter Rabbit 1 and 2, and have credit on Captain Marvel.
Lego.
So there you go, Paul.
Those
Your
Lego
Netflix subscription
really
will stay
good,
forever.
Right? Tell me I'm wrong. Tell me I'm wrong. They were really good.
Lego, they did the Ninjago ones as well. They were the good ones.
I noticed that all the series are really quite poor in comparison as far as polishing goes, but the Lego movies have been incredible, haven't they? Lego Batman was funny. They've got great writers in for it. So yeah, there's something there, right? That sounds good.